Well, hello traders. What a market it's been today. Today is Monday, Cyber Monday to be exact, November 28th, 2022. And it's been quite the slide from the market open. Heck, pre-market this morning was even down related to the financial markets. We're going to take a look today and see if the artificial intelligence in VantagePoint was able to identify this market move in advance. We're talking about Friday at the end of the day. Hi, my name is Daniel, and I'm with VantagePoint AI, and we're going to take a deep dive into the artificial intelligence today so that you can understand the advantages or disadvantages with using artificial intelligence to determine the market direction. I'm talking about forecasting trends 1 to 3 days in advance with up to 87.4% accuracy. Let's dive in and take a look. All right, right here on my screen, you can see we're looking at the S&P 500. This forecast and this information came out on Friday at 6:30 p.m. Eastern Time. And I've got 3 months of data pulled up here on the screen. For those of you that don't know, the S&P 500 was created as a gauge of the overall market. It helps you understand what the market has done recently by looking at 500 of the Standard & Poor stocks on that index. Well, by looking at this, we can see that we're going for a 3-month period, and we're going to take a look at price. We're going to take a look at the artificial intelligence, what it's doing, and how today's market movements could have been predicted thanks to the help of artificial intelligence. So the first thing that I want to do is I want to dive into what the AI is doing from an analysis standpoint day to day. If I go right into the market details really quickly and I just show you what the artificial intelligence has analyzed. Here on your screen right now, you should see a graphic that has the E-mini S&P 500 in the middle. And why it's in the middle is because this is considered the target market. Target market meaning the AI is going out and it's analyzing relationships around the world. We're talking about over 10,000 markets analyzed to figure out which ones are driving the price of the S&P 500. Now, when I say driving the price, I don't mean correlated markets going along with the S&P. I mean they have some sort of influencing factor. They could push it higher, they could push it lower, heck, they could keep it going sideways. And when I say they, I mean what we call intermarkets. You see, what the artificial intelligence is doing is called intermarket analysis, and it's looking to figure out which markets are influencing the S&P 500. And this list or this diagram shows you over 30 markets that have been found to have an influence on the S&P. The S&P 500 is in the middle, and every single other market around it is a market that we would consider an inner market that has an influence. Things like light sweet crude oil, right here in the top left corner. Light sweet crude oil is a nucleus market. It has an impact on almost everything around the world. And in this case, it's saying it drives the price of the S&P 500 either up, sideways, or down. So does gold. Look, the euro. We're not just talking about domestic markets, but the AI has gone out, the Japanese yen, and figured out not only domestic, but international markets that could have an influence on the S&P 500 movements. Some of them make complete sense, like the ones that I've highlighted, including the US dollar. Or natural gas. That probably has some impact, but how much? And that's where this kind of analysis isn't just convenient. This kind of analysis is not only necessary, but it's humanly impossible. There's no way you'd be able to figure out what Fox Factory Holding is doing to the S&P 500 without analyzing millions and millions of data points. Here's the good news. Artificial intelligence, it eats data for breakfast, lunch, and dinner. You see, it's able to analyze millions of data points and figure out hidden patterns and relationships, both nonlinear and linear ones. Things like Garmin, which I would have no idea how or why it's driving the S&P 500 or Cedar Fair, right? These are markets that are below the surface, if you will. The patterns or the impacts are so minute, it's impossible for you to detect without the benefit of artificial intelligence. This analysis that I've called intermarket analysis is one of the patented processes that we have here at VantagePoint. You see, this data has been analyzing global markets. This AI has been analyzing global markets and has gone through over 10,000 markets, millions and millions of data points over the last 31 years. Yeah, you heard me correctly. For 31 years, it's figured out that Juniper Networks or Chipotle, options traders, look at this, Chipotle has an influence on the S&P 500. Some of them are obvious, like the NASDAQ, the PowerShare Qs ETF. Some of them not so obvious, like the microsector's U.S. Big Oil Index, an inverse triple leveraged ETF in this case, is driving the S&P 500 in some way, shape, or form. Here's the great news. You don't have to know how. What you have to know is that it is driving it. It's having an impact on it. And once you can figure out what is driving the price of anything, you can utilize that information to determine where that thing, in this case, the S&P 500, is expected to go. Now, this analysis not only has figured out which over 30 markets are influencing the S&P, but it knows the directional bias, meaning do they push it up, sideways, or down? And for each one of these markets, the AI has attached a certain weighting. So they're all weighted by degree of impact. Now, when you really break it down, not only is it humanly impossible to figure out these 30 plus markets, but to figure out the directional bias and the degree of impact, that's something that is possible for artificial intelligence to do, but impossible for you and me to do it, even if we tried to do it together. I just wanted to take a second and pop the hood to let you take a look and understand what is the artificial intelligence doing behind the scenes. Well, here's the great news. You don't have to do this to make a trade. You don't have to do this to do any analysis. This is happening behind the scenes for you automatically when you run the VantagePoint software. So let me go ahead and get this off the screen really quickly, and let's do some deep dive into the software, specifically on the S&P 500. Now remember, what we're trying to figure out is if today's market movements were able to be picked up by the artificial intelligence, and if there was information there to help you know whether or not the trend was expected to be higher today or pull back today or maybe just consolidate. So let's take a look at the screen. The first thing I notice here, and remember, each candle is one trading day. This is end of day data. First thing I notice is that there was a recent high set right here on this day. And if I put my cursor, my crosshair on that day, I can see it was November 15th, and it was at about 40.50 from a price standpoint. That's 4,050. First thing I want to do is I'm going to drop a line that's going to stay. This is a static line that's going to stay right here, and I'm going to set that line at 40.50, and I'm going to make that line red. And the reason I'm doing that is because I want to visually see this resistance point as it happened on the screen as I do some more analysis. Now, for those of you that don't know why this is a resistance point, just take a look at the screen really quickly, because you can see to the left there are two candles that have lower highs, and to the right there are two candles that have lower highs. These four candles with this high in the middle indicate that this is a resistance point. That resistance point is valuable because that means that is a past price point that could have an impact on future price. Now, when I say an impact, I mean it could stop it from rising, it could push it lower, and it could be a non-existent barrier that with the right momentum and the right bullish volume, it could blow through that. Those are three outcomes when you've identified a resistance point. Now, something else that was highlighted for me very quickly on this chart is that we have 2 days. We have Wednesday's trade day and we have Friday's trade day, which was a half day, going up and basically almost touching that resistance point, and then closing lower than that resistance point in both cases. So I already have an indication by looking at that there is some weakness. There was some weakness on Wednesday and Friday, stopping price from getting too much higher than 40.50. So when I look at that, the first thing that I need to understand is, how can the artificial intelligence give me information to analyze that as a resistance point? Well, the resistance point is clear. Over here on the right, you can see there's a gray bar. See, this information was updated on Friday at 6:30 p.m. Eastern Time. That was, what was that? That was Black Friday. Well, you can see when it drew that high, that's a predicted high right here. This gray bar was a predicted high. And when that was drawn on the screen by the artificial intelligence, it was very clearly set and said, you know what? The high for the day, it's not expected to break that resistance point. Now, I'm reading the artificial intelligence, and that's what it's telling me. I zoomed in on it so you can see it. But basically what that tells me is that there's not enough indication from that intermarket analysis we just looked at. There's not enough indication from those global markets to say that price could push past that. Well, if price can't push past that, I need to know that price could at least get up to it and move higher off of Friday's close. Friday's close was 40.32. Well, that means between 40.32 and 40.50, I've got about 18 points there that I can consider to say whether or not price could get up to 40.50 today. The predicted high is telling me not likely to get past that. Thank you to the artificial intelligence. You also get a predicted low. The predicted low is much lower than Friday's low, which is also a piece of information I need to understand when doing some analysis. You see, these predictive indicators were enhanced by the artificial intelligence. Not only were the calculations created thanks to that intermarket analysis, but the predictive information was generated by the AI to say, this is the predicted high on Monday, Cyber Monday today. This is a predicted low, so that you can use that in conjunction with the actual prices from the last market to understand what is the AI expecting the market to do today. And so far, my answers are, well, the AI is saying not expected to break resistance, and the low is much lower than the close on Friday, already indicating some potential pullback on Friday night at 6:30 p.m. Eastern Time. Let's dig a little further. One of the things that I said to break resistance that we need is strong momentum, bullish momentum, and strong volume. Well, if I put volume on this chart, I can see that from Wednesday, we had strong bullish volume. We had increasing bullish volume on Wednesday, but Friday didn't hold up. So I'm already having an exit of volume, and that volume is more bearish than bullish. So again, that resistance point is proving stronger, and the AI is telling me, based on the indicators we're looking at so far, that weakness is expected on Monday. This came out on Friday, just a reminder. The other thing we need is momentum. I'm going to look at the momentum indicators generated by the artificial intelligence here. They're called predictive differences. It's these three lines right here on the screen. And there's three of them because they're capable of providing you predicted momentum expectations from the artificial intelligence, doing the global market analysis, and then telling me over the next 1, 2, and 3 days what I can expect from a momentum standpoint. And by looking at this chart, my 3-day momentum indicator, which is that navy blue line, is pointed down, indicating bearish momentum expected today on Monday. My light blue line is also pointed down. That's my 1 day. And my pink line I can see is pretty much sideways. So what I'm getting is 1 day bearish momentum, 2-day consolidation, and 3-day bearish momentum. Well, if I add all that up or just think about it and come together with an average, if you will, the best I can get from a momentum standpoint, based on what the predictive indicators are telling me, is more consolidation, but likely bearish momentum. Remember, 2 of those 3 predictive indicators are indicating bearish momentum. So what we can see so far, thank you to the artificial intelligence doing that analysis, is that momentum is expected to wane, that the low is much lower than the close. The predicted high is not expected to break momentum. So going into the market today, heck, going to bed on Friday night, I knew what to expect from the S&P 500 today on Monday, thanks to the help of the artificial intelligence. Now, this is just a few of the indicators and some of the interpretation that you can do with the VantagePoint software. I can tell you there's multiple predictive indicators generated from the AI. Those indicators are also patented indicators. So not only does the VantagePoint software have a patent on the intermarket analysis, the process for finding those hidden patterns and relationships, but the software also has a patent on the predictive indicators that are generated from that artificial intelligence. If this is helpful information and you can see how this artificial intelligence can help you and give you the ability to forecast with accuracy up to 87.4% of the time, and this was helpful, leave a comment in the comment box and let me know whether or not this is the kind of analysis that could help you be a better trader. Move into the end of the year with more confidence and be more consistent starting out 2023. Thank you for your time today. I appreciate the opportunity to give you a little insight into the artificial intelligence, and thank you for letting me give you a view from my vantage point.